This RealAg Radio podcast is brought to you by Focus Herbicide from FMC. When tank mixed with glyphosate, Focus Herbicide provides a complete solution. Burn off and extended control on key grassy and broadleaf weeds like wild oats, bromes, and kochia in lentils, wheat, and more. See your local retailer today.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. Welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Wednesday midweek edition of the show. Hey, thanks so much everybody for making RealAg Radio and Rural Radio 147 a big part of your work day. And it is great to be with you here midweek. Today, we've got a lot of big issues to chat about. Looking forward to it. We got Dennis Laycraft, who is Executive Vice President with the Canadian Cattle Association, to talk about what the heck, America? What are you doing? Product USA label final rule changes are out. And to say that it is not in what Mexico and Canada were looking for, a bit of an understatement. Dennis will be here to break it down and talk about it. And will Canada actually retaliate? What could that lead to? And that and more. We're also going to be joined by JP Gervais. Farm Credit Canada is out with their land value survey for 2023. And good time to own farmland. It continues to be. Farmland value is up 11.5% across the country. Now, it's not all rosy in all areas of the country. JP will break down some of those provincial differences. And I got to ask him, at what point does this kind of slow down? And if you were predicting, this is the year for about the last 3 years, boy, were you wrong. Even in an increasing interest rate environment. We'll also be joined today by Kurt Blades. He's with the Association of Equipment Manufacturers. We've got some audio with him from Commodity Classic, and I'm going to update you on the February 2024 AEM numbers for Canada and the U.S. when it comes to new farm machinery sales, to tie into that interview as well. And we'll also have time today for the top ag news stories of the day. If you have any feedback on today's program, well, there's lots of ways to get a hold of me. You can send me an email, shaney@realagriculture.com. You can find us across all the different social media platforms. Or I would love to have you call the RealAg feedback line, 855-776-6147. On Monday's show, I mentioned the Real Agriculture poll for the week. We're asking you, if you're hiring this year, how short are you on workers? And right now, 35% of you saying we're pretty well set up. We don't need anyone, or maybe 10% short-staffed. Well, 34% saying we're short about 15 to 40% of our workforce. And 22% saying we're focused on adding automation efficiency and not more people. So the introverts are at 22%. Okay, so go to realagriculture.com if you have not voted in our poll yet, and please indulge and let us know how you are, where you're at with your hiring here for the 2024 growing season. Speaking of farm business, we have a new episode of Mind Your Farm Business that's been posted at mindyourfarmbusiness.com or wherever you get your podcast. You can find the Mind Your Farm Business podcast, brought to you by RBC Rural Bank. We got a great new discussion with Dave Mitchell. Now, he was the keynote speaker at the Ag Excellence Conference with Farm Management Canada back in the fall. And Dave's company is called The Leadership Difference. And we did an episode, had a discussion about peak performance culture. You know what? Heading into the field for this spring, this is an episode that you do not want to miss. It's not about just getting the work done. It's about having that culture around the strategy and the tasks that you need to have. And he's got like a 5-point plan that he goes through. It's really, really excellent stuff. I really loved his keynote speech at the AgX conference, and being able to follow up with him with a bit of a deeper dive into a conversation as well was really, really cool. I learned a bunch of stuff. So check it out, mindyourfarmbusiness.com or wherever you get your podcasts. We're going to take a break, and when we come back, we're going to find out what what CCA thinks about this final rule on Product of the USA label and what exactly it means for the integrated beef value chain between Mexico, Canada, and the U.S. Dennis Laycraft joins us right after this.
FP Genetics relentlessly brings innovative new seed genetics to Canadian farms, ensuring growers, breeders, and farmers are supported and viable. Being a valued partner on your farm for decades, you can expect the continuous pursuit of the best genetics. Visit fpgenetics.ca to discover FP's strong portfolio of wheat, durum, barley, oats, peas, and rye, or contact your local FP seed dealer or territory manager to discuss your certified seed strategy specific to your region.
The Canola School on RealAgriculture.com is your one-stop shop for everything a canola grower needs. Check out our free video series on YouTube for all the latest in canola agronomy, research, marketing, and more. Don't have time to watch? Download the podcast version of the Canola School on RealAgriculture.com or anywhere you download your podcasts. Stay on top of all things canola with the Canola School on RealAgriculture.com, brought to you by BASF and Invigor Hybrid Canola.
Co-op AgZone Field is a digital agronomy tool designed to help optimize your operation. Through integrated layers of satellite imagery, soil maps, yield data, and more, Co-op Grow team members use AgZone Field to provide organized, timely, in-season data, allowing you to make informed management decisions quickly and effectively. Trust your Co-op Grow team to support your operation with AgZone Field. Contact your local co-op today.
Next thing you know the next thing. Next is Now is a short podcast discussing agriculture's emerging next generation tech and trends as they're happening in our industry. Next is Now is presented by GFL Ag. Listen where you get your podcasts. Had a chance to catch up with Dennis Laycraft, Executive Vice President at the Canadian Cattle Association, and wanted to get Dennis's take on what we've seen this week out of DC in regards to the final rule on the Product of USA label changes. This is something we've been talking about for a while. Is this cool, or is this just a new version, or how exactly do we interpret this? And I guess the news came out of Scottsdale, Arizona, because that's where the NFU meeting was happening in the U.S. And USDA Secretary Tom Vilsack made the announcement and presented it at that meeting. So let's hear what Dennis Laycraft had to say. Hey, Dennis, how's it going?
Well, other than the rule that was announced today, so
I didn't want to be the black cloud here. So you've alluded to it. We've got the final rule on the Product of USA labeling. Secretary Vilsack was at the NFU meeting this today, Monday, in Scottsdale, Arizona. Made an announcement regarding the final rule. The way I read the press release from the USDA, it looks like it's the same rule today as it was heading into the Office of Management and Budget.
Yeah, in a nutshell, that's what came out today, that it's going to maintain the born, raised, slaughtered, and processed in the U.S. definition, and for anybody using Product of USA. And, that makes it one of the most onerous rules in the world for that designation.
So there's lots of examples to sort of provide context here, but essentially it has to meet all of those requirements in order for that steak, for example, to say Product of the USA. It has to meet all those requirements. So, for example, an animal that doesn't meet one of them can't carry that label. That's correct. Is that correct?
Yeah, that's correct. And the label is to be voluntary, but you've already seen USDA announce mandatory procurement requirements for some of their purchase programs, but it's now based on this definition. So when you start to have mandatory buying requirements, you start to then move to where, is it becoming a condition of business? And then you start to get into the de facto mandatory area that we all would like to avoid.
Dennis, what's the difference? One of the things I hear a lot from our American audience is, well, you guys have a Canadian label. We're just doing the same thing. And I remember you telling me previously there is a difference. What is it?
Well, certainly there's two things. Most of the time when you see our Canadian label on on beef, it's a Canada beef label. It's a trademark label. It isn't a government regulation. So we work with companies, and it's got a whole bunch of quality characteristics associated with it. Now, we have a product of Canada definition, and, to be honest, we'd like to see ours changed as well. But we do allow about the only animals we bring up from the U.S., and we bring a large number. It can be up to 350,000 head of feeder animals.
Yep. We
have a residency period where those animals all qualify for product of Canada because they're fed in Canada. Most of their weight and their growth is here in Canada. So we found a way of facilitating virtually all of the imports from the U.S. to qualify for product of Canada, where this rule basically disqualifies any animals from Canada or Mexico or anywhere else. But interestingly enough, we bring those same feeder cattle up from the U.S., fed in Canada. If many of them go back to the U.S., they don't qualify for product of U.S. So it's certainly not going to help that trade either, which has been pretty important to a number of U.S. producers as well.
Do you have, or have you been able to quantify the potential costs that this final rule could have on the Canadian industry or the American industry for that matter?
It's hard at this stage. First of all, there's some people who may just choose to ignore, when I say ignore, just not use product to USDA on their labeling because it's going to be, that onerous definition. It sort of starts to come back to if it gets broadly adopted and it becomes a condition of trade. What we saw under mandatory country of origin labeling between cattle and hogs, it cost about $1 billion a year to the Canadian industry. So it was quite significant. Quite often we were seeing discounts that were in the $45 an animal for all animals that were going to the States on feeder cattle. And likewise, there were discounts, but the impact was much greater than that. We had a number, we went from 17 plants that were processing cattle every day of the week to 7. And there were only 3 of those that were processing every day of the week. So we had a number of them that were only processing certain days of the week. So all of our exports were compressed. And when you have a shortage of truckers, for instance, that exacerbates that problem. In some cases, people had to ship animals another 1,200 kilometers from what would have been their normal customers. So the transportation impacts, you just had a whole range of consequences when these things get put into place. And, we're going to be monitoring that very closely over the next I guess it's 20 months before it gets implemented. So.
Okay, that's what I was going to ask. With the implementation date, that's 20 months out. So Canada does have, from when we had mandatory country of origin labeling, Canada does reserve the right through the WTO to retaliate. Does this qualify? Do you think Canada be retaliating, or is this a wait and see, or this is a different lane completely from that WTO ruling? What's your thoughts there?
Yeah, it's certainly not a different lane at all. The fundamental basis of the ruling in the MCOOL case was that this measure resulted in some discrimination against live cattle and hog imports from Canada and Mexico, and that had to do with that segregation costs. So there were extra costs in handling our animals, and that including the labeling, but most of it was the segregation prior to it being processed. Or, as I mentioned, there are a whole bunch of other costs because of plants that just simply because of the rules chose not to continue processing those animals. So, if we start to see that level of segregation again on imported animals, then that starts to move us to where we can say this rule is having the same impact that MCOOL had. And so we'll be gathering and watching that very closely. And, certainly that'll become more apparent as the rule gets closer to coming into effect.
You know, Dennis, when this process started, it was about beef coming out of South America, say Uruguay, ending up in the U.S., repackaged into a different box, and then putting product to the USA on it. And I remember you and I chatting, and the fear was scope creep because, hey, that example, that's not right. It needs to be fixed. Makes sense. And the scope creep you were worried about appears to be what the reality is at this point. It's now we've encompassed a whole bunch of other things in this process. Is that fair?
Yeah, it is. It certainly opened the door to bringing back this much broader definition that was basically part of MCOOL. Now they've added process, so they've made it an even more prescriptive definition moving forward. And that was the issue, was some people were bringing some product in, just basically taking it out, cutting it up, selling it as steaks and putting product to USA on it, which, that could have been corrected by a number of other options that would have recognized the level of integration in North America and the benefits of that integration.
So next steps, you said 20 months till the implementation. I'm assuming there's really no process of like appeal. It's not that kind of a process. Is this something that the Canadian and Mexican industry will be working to try to fix as a carve out in if USMCA is reopened, or is there an opportunity to pursue exemption or carve out for Canada and Mexico without having to go through that process? What are the next steps from a Canadian perspective?
Yeah, I think we need to engage with our U.S. counterparts. This won't be a Canada or Canada-Mexico solution. It's something we'll be visiting, as you mentioned. It's a big issue for many feeders in Texas. It's a big issue for a number of feeders in Kansas and Nebraska in particular that bring a lot of Canadian feeder animals in. So we're going to be sitting down and trying to walk through where we move with this. And, there's a couple possibilities. First of all, there may be a lot of people just look at it and say, this is just too difficult to utilize. And, our concern is, as you keep seeing these procurement requirements based on this rule, at what point you hit a point where they just feel they have to do it. So we'll be monitoring that. But our preference would be to come up with something that is based more on the Codex rule. As you go through the rule, there's actually going to be two product of USA definitions. There's one for export that they say each country determines with the U.S., and then there's the product of USA in the United States, because you do have to put your country product designation on all products that we export. And it makes a lot more sense for us to align with the international. And Codex is basically can determine that slaughter in most cases conveys origin. It's about as substantial a transformation, and these definitions are a lot bigger than just agri-food. There are so many things you purchase that are part of the inputs are raised here, they're moved somewhere else, then it's manufactured or processed into something more, and then there's lots of examples where there's accumulation and different things, but rather than creating this whole litany of definitions and descriptions out there, you come up with sort of these generally accepted rules like you see under Codex. And that's a conversation that we intend to continue to pursue, but we've got to, I think, get the right group of people together when we have that conversation, if we're going to be successful with it.
Dennis, thanks so much for joining us here today. I do appreciate it. This won't be the last time we talk about this story. I am sure of that at this point. And until next time, cheers.
Yeah, take care.
That was Dennis Laycraft, Executive Vice President with the Canadian Cattle Association. This topic is going to be discussed more and more going forward. It seems, if you read the release from Minister Ng, Trade Minister for Canada, as well as Ag Minister Lawrence MacAulay, took a very wait and see approach where, looking at, I can't remember the exact words they used, but it was very, very passive, which I was kind of surprised by. And a few industry people point that out to me, that an opportunity for the current government to be a lot more aggressive in terms of the reaction to this. If you're sitting in the U.S. and you read the release that came out from the Canadian government, you're like, well, not a big deal, really. Seemed pretty passive, and that's kind of how I wouldn't blame them for reading it as such. So we'll have to see, and if Canada does move to some sort of retaliatory situation, if this voluntary really does mean mandatory, it's that's where we could end up. So yeah, fascinating stuff. As 20 months to implement, which kind of overlays very quick or closely to the USMCA potential renegotiation as well. So lots of things to talk about in this file. Okay, let's take a break. And when we come back, we're going to hear from JP Gervais, Chief Economist with Farm Credit Canada. We're going to find out what's going on in the Canadian land market. And man, I got regrets. Wish I would have put more. I wish I would have put all of the savings I have into farmland. Y'all are out there very lucky. You've made a lot of money. And you continue to do so. And we'll find out how much when we come back. You're listening to RealAg Radio, Rural Radio 147.
I'm Lindsay Smith from RealAgriculture.com. Join me Monday nights for The Agronomist, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomist with me, Lindsay Smith, Monday nights live at 8 p.m. Eastern.
Through a growing storm of kochia, cleavers, chickweed, and more, there's a clear path. Introducing Oxbow, a versatile cereal broadleaf herbicide that gets the job done. Powered by Duplisan technology, Oxbow is your workhorse on resistant kochia and other tough weeds. With flexibility in timing, rates, and recropping options, your path is clear. Find your way on the path of least resistance at newfarm.ca/Oxbow.
Peter Johnson at Wheat Pete, RealAgriculture.com, and what an opportunity! Oh my gosh! You think you can't grow better wheat? You are absolutely wrong. We're going to show you how to strive for those record wheat yields that they get in the UK and in New Zealand. You can grow 150 bushel wheat. I'll show you how.
Catch Wheat Pete's Word every Wednesday on RealAgriculture.com or download the podcast on iTunes or Spotify. Co-op knows your community because, well, we live here too. Our teams are your trusted partners with a range of expertise to help support your entire farm operation. Co-op, here for your farm, here for your family. Learn more by going to Co-op's website, co-op.crs/farm, or I recommend you just Google Co-op. Okay, let's dig into the land value report that FCC has put out. I had a chance to catch up with JP Gervais, Chief Economist with Farm Credit Canada, to find out what the numbers are saying.
My expectations going in, given what we know about the economic environment for the ag industry, I would have thought that maybe the rate of increase would have been a little bit lower. If actually technically we do have a little bit of a lower rate of increase compared to last year. We had, up to last year, we had 3 consecutive years of the rate of increase going up. So it was an acceleration of the increase in land values. Now, we do have a number that's a little bit lower. It's still double-digit growth in land values on average across the country. I'd say we got about 2 provinces where we can definitely see a little bit of the slowdown. Again, doesn't mean that land values, the market's collapsing, but they definitely, the economic factors that you and I have talked about for a number of years now with regards to higher interest rates, commodity prices coming down, they look to be playing out. But for the most part, across the board, you still have some very, very strong fundamentals in the marketplace.
Yeah, you look at some of the price of land in Ontario, up 10.7%. That that's there's that stuck out to me. Saskatchewan's still going very, very strong, up over 15 or 16%. And you mentioned the province. One of the provinces definitely showing a little bit of we're kind of cooling off here. We're still going up, but we've cooled off on the rate of increase. Would be Alberta at just under 7%.
Yeah, so for Alberta, we did get a few signs that this was happening in mid-year. So now that's not a surprise necessarily to see the year-end result where we've seen the rate of increase slowing down a little bit. If you look at the prairie provinces, you were mentioning Saskatchewan as well, that 15% range. One of the things we like to look at is affordability, right? So you look at the price of land, you make some assumptions about if you were to buy land, what kind of payments you would need, you would make in terms of capital and interest expenses, and compare that to the revenues you can generate off the land. And if you look at Saskatchewan, that ratio is still around, it's at an all-time high, but it's still around 30%, a little over 30%, I believe. And if you compare that to Alberta, again, Alberta average land prices, average revenues, if you think of average yields, average prices, and so forth, you're in that 50% range. So it's not necessarily a surprise to see a province like Alberta, where the rate of increase is slowing down compared to the province of Saskatchewan, where land prices are a little lower, more affordable, and so forth. And you did mention Ontario, still very strong, above 10%, after 2 years of roughly 20% increase. And again, that same affordability ratio in Ontario, well, you actually are, you have to allocate more than 100% of your gross revenues, what you can gross off the land in terms of capital payments and interest payments if you were to buy land, under some standard assumptions. So land's really expensive, but demand seems very strong. And the reality is that supply is so tight. I mean, there's just not a whole lot available, and that just tends to drive prices up.
We should have pooled our money together, JP, and just gone and bought some land. That's what we should have done. Woulda, coulda, shoulda.
Well, that's that. I think the point being that if you look over the last so many years, more than 10 years, not only land prices have generated land has generated a good return, it's also generated a stable return. So when you think of it, right, you're expected any type of assets, when you're looking at a high return, you'd be expected in return of taking on a higher return to live with a little bit of volatility. But in the case of ag and the farm economy overall, when it comes to asset values, it's been a good return and stability, which is very unique in some sense.
JP, what's going on in British Columbia? It's negative on the board. It's down 3.1%. What's happening?
Yeah, so we have a region, the South Coast region, where, in that valley where land prices have been moving down a little bit. So, and that's to be taken with a grain of salt a little bit, right? The range of values in that region is so high, the largest across all the different regions that we monitor across the country. So it's not a surprise that sometimes you'll get a few sales that perhaps are on the lower end of that range. That tends to bring the average down year over year. So I think things are cooling off for sure. Absolutely. That doesn't worry me too much in terms of the strength of the market. I think demand's still strong, but I mean, we do see a little bit of cooling off from the willingness to pay from a buyer standpoint. And so I think some of the high values that we have in that area, in that region, sort of explain a little bit of why we have a little bit of a decline.
So who's buying the land? Is it, because some people will jump to is, well, this is, pension funds and outside, foreign investors. Any insights there on what's driving the land market?
Yeah, so a couple of things. We'll never be sure 100%, like with a precise statistic when it comes to buyers, because it's, we look at sales, not just the sales that we finance for FCC, but overall sales. But we're never sure to be capturing 100% of all the sales that are happening out there, right? So that's one thing. But the bottom line, the quick answer to your question is producers. I mean, it's farming operations that are buying land. Now, we can deny as well that over the last couple of years, there's more and more buyers that are not farming the land. And I would say that range is around 15%. So you'd see a little bit more of that activity in some provinces, a little bit less in others, but around 15% of buyers that are not going to farm the land is what we have in a data set. Those are not transactions that we finance, but nonetheless transactions that are in the database. So for the vast majority of the transactions that we have in a database, that's farm operations buying land. But yes, I mean, absolutely over the last couple of years, certainly, and that's actually, we've been kind of just trying to assess this for the last couple of years. We have a little bit more of an interest from non-traditional buyers, I would call that, but still for the most part, farm operations that they're buying.
There's another category though too. It is the farmer being, the farmer of the land, but, I don't know what phrase I should use, but like a front, or, they have outside investors that are funding the farm making the purchases. And that's hard to quantify too, but that is becoming more of a popular thing in the industry as well.
No, different sources of capital for sure. And I think it speaks to, for me personally, I think it speaks to the outlook that most businesses have for agriculture overall in Canada. I mean, we do have challenges in front of us for sure. There's some things that we have to work towards, trying to get our productivity up and all those type of things. But when you look at the outlook for the industry, the fact is that more capital is coming into the industry. And I think that overall is a good thing. Now, it does raise a few questions when it comes to, for example, young farmers or businesses that are trying to establish themselves, expand their land base. Because as I said, I mean, when it comes to affordability in most provinces, we are at a record high in that negative way, in a sense that the least affordable ever when you look at land prices relative to farm revenues, considering where interest rates are. So there's no denying that it makes it harder for young producers, harder for small businesses to expand and so forth. But nonetheless, I think more capital is coming in the ag sector because it's a sector that has a promising future.
Yeah. And the other thing that we have seen in some of our Real Agri Studies work is that although farmers are negative in terms of now being the right time to invest capital, clearly your numbers are showing that the land market is out, outside of some of that negativity. And we've also seen that, farmers, the largest farmers are the ones most interested on intentions to buy land or have bought land. And so it kind of feeds some of that narrative too. I think it's the big get bigger, which is, based on the size of the money required to invest here, that kind of makes sense, as sort of you alluded to.
That does make sense. And then your data says it. I mean, if you look at the census data as well, it says it in terms of like what kind of distribution of farm size that we have now in the industry. I think there's no denying that we're trending in one direction. Now, I'm not suggesting it's a good thing or a bad thing. I'm just saying that it's, we are at a point when you look at land prices, and that's the least close, if not in all provinces, in most provinces, the least affordable that it's ever been. So it says something about, how people feel about the future of ag, because I think the need, and then our economies of scale, then, we need to optimize how we run the business and then so forth. And it all gives reasons to buy, and different businesses will have different strategies and different plans as well. So.
Yeah. If you look at the increase, across the country, 11.5%, and, even with drought in Western Canada, we got Saskatchewan up healthy, even with, interest rates being an issue, and there's, the markets, being a concern in the back half of 23 for sure, as they continue to be in 24. It does speak to the fact that overall the farmer is still very willing to invest in something they're not making more of, as my grandpa used to say. It's land.
Well, that's very true on the supply side, that's for sure. I mean, if you look at the calendar year 2023, because that's how we work the land value study. Yep. If you look at the calendar year in Saskatchewan, receipts of grains and oilseeds and pulses went up 6% calendar year. Now, of course, the back end, or that second half, is going to be a little bit weaker because of some of the dry conditions that we had. And I think if you look at the forecast for 2014, then maybe, and just maybe, this is when we actually see a little bit more of a slowdown. Because if you look at the forecast right now, we're saying basically receipts of grains and oilseeds and pulses could fall by about 14% in 2024. That's because of lower commodity prices. That's because of the drag that 23 production is going to bring into 2024 for the first half of the year. So all of that together, maybe that's one of the years when we have a little bit of a slowdown. Interest rates, we're going to get some relief, but that's going to be towards the second half of the year. And, a lot of operations will still have to price debt at a higher rate than what they have currently in the books. So all of that together, maybe that's, what we're seeing in BC, what we're seeing in Alberta, and maybe a little bit of a kind of a heads up, or kind of a little bit of an advanced warning, kind of a lead indicator of what could happen. But the bottom line is tight supply just plays a huge role. I think that's one of the things. Then when farm income was increasing, we kept, and I did that, I kept saying that, well, farm income, low interest rates are kind of fueling some of that demand. But I think we kind of pushed aside kind of on the supply side. Not only we're not making any more of land, but bottom line is that there's less and less available for sale. And so that's just like when something comes up, there's quite a bit of an interest in terms of bids. So
yeah, good reflection there. Hey, JP, thanks a lot for joining us here today, and congrats on the report, and look forward to looking at what 2024 brings.
Always a pleasure, Shaun. Thanks for the invite.
Curious what your thoughts are, what you heard there from JP Gervais, Chief Economist with Farm Credit Canada. Is 2024 the year that we see a little bit of steam taken out of this Canadian farmland market? Interested what your thoughts are. Send me an email, shaney@realagriculture.com. And maybe you want to provide perspective on what we saw in 2023. Is there anything that stands out to you? Is there surprises or additional questions that you have? Be sure to share those as well. Let me tell you about the new Oxbow cereal broadleaf herbicide from New Farm. Oxbow is powered by duplasm technology that it's a workhorse on resistant kochia, hate kochia, and other tough weeds in wheat and barley. Okay, we're going to take a break, and when we come back, we're going to talk about what's going on in the machinery market. There is, we've moved quickly from where there was a lot of you buying new machinery to all of a sudden, those numbers are looking a lot more negative. We'll get to that when we come back. You're listening to RealAg Radio, Rural Radio 147.
Does your N stabilizer contain an active ingredient load high enough to be agronomically effective? If not, it could be costing you time and money. If you're putting down a nitrogen stabilizer, put your trust in Koch Agronomic Services. Solutions like Super U, Tribune, and Anvil. Each delivers high active ingredient concentrations that low-rate products just can't match. Compare how imitator products stack up to agronomically effective solutions at defendyourn.ca.
Hi, I'm Bernard Tobin, host of the Soybean School on RealAgriculture.com. Throughout the year, on the Soybean School, we'll bring you timely agronomic video content from planting to harvest, from the latest agronomic research to the latest in production technology. Check out our massive video library on YouTube, RealAgriculture.com, or download the audio podcast versions wherever you get your podcasts. The Soybean School is brought to you by BASF and Syngenta Canada.
Invita bridges the nitrogen gap all season long, enabling your corn crop to fix the nitrogen it needs from the atmosphere. Here's the best part: when and where it needs it most. Let Invita set your crop up for success by requesting it from your local retailer. Let's dive into what's happening in the new machinery market. And we heard from Machinery Pete going back in January. He was talking about kind of the softening in the used market. Well, from a new equipment sales standpoint, kind of fascinating here is that sales in the United States are lower across all categories year to date. Two-wheel drive tractors are down 14.4%, four-wheel drive tractors are down 7.2%, and combines are down 18.9%. Now, that's the first 2 months of 2024 compared to the first 2 months of 2023. And even if you look at just the February numbers, they're all negative. Okay, so two-wheel drive tractors in the U.S. for the month of February compared to February of 23, down 6.7%, for example. And self-propelled combines, which I don't know why we say self-propelled, combines, down 31.5% in the U.S. in the month of February, year over year. In Canada, it's actually a little bit more of a mixed bag, but in some ways worse, in the sense that four-wheel drive tractors are down 28.9 year to date as of the end of February. And that's two-wheel drive tractors. Four-wheel drive tractors is down 3.4, so a little bit flatter. But its combines are actually up 6.3%. And some of that's, I think, being driven by the fact, if you look at the February numbers for Canada, combines for February are up 27.2% in the month of February 24 compared to February of 23. So, yeah, these aren't surprising. I don't know where my expectations would have been or where yours are, but I'm not surprised that we are in the negative for the most part across the board in Canada and the U.S. because it ties very, very closely into what you've been saying to us from your level of optimism from a financial perspective. We've seen current farm financial performance and future farm financial performance, and our Canadian Farmer Sentiment Index is in the negative, and that's going to translate into machinery sales being weaker. Now, it hasn't necessarily impacted the land market yet, but for sure machinery is one of those things that is definitely showing some weakness in comparison to the past few years indeed. So at Commodity Classic, Bern Tobin of Real Agriculture had a chance to catch up with Kurt Blades of AEM, Association of Equipment Manufacturers, who puts out these reports. Talk about the state of the machinery business. Here's that conversation.
Yeah, I mean, tractor sales and combine sales have been a little bit soft this past year. We ended for row crop tractors, we ended basically flat. Combines and articulated four-wheel drive tractors ended 2003 up a little bit, and small tractors ended up a little bit soft. That happened in both U.S. and Canada. Kind of had that same trend. As we look into 2024, we're seeing kind of more of the same. There's some softness. We started off a little bit soft in January, probably because of commodity prices, maybe because of interest rates. But overall, the fundamentals up behind agriculture continue to be strong. So we're in a place like we are here at Commodity Classic, where it's fun to see this technology. You know that these tractor sales will probably continue to be strong for the foreseeable future.
What do you like about what you're seeing from a new release perspective? There's combines, there's tractors, there's lots of things going on.
There are 7 combines on the floor here at Commodity Classic. That's the most I've ever seen here. And some of those are new. A couple of them are being seen in the public for the first time. That's pretty exciting. That's new technology that, obviously a farmer doesn't buy a combine for next year's harvest. They buy a combine for the next 5-10 years harvest. And they're doing that, they're making that sizable investment because it makes good sense economically for their business. So to see this new technology that's making a fundamental difference in farmers' productivity, and see it on display, and then seeing the farmers kick the tires on it, it's pretty exciting. Gives me a lot of hope for the future. Also gives me a lot of hope for the optimism that the farmer has when they're making those purchase decisions.
You talked about optimism, and we can't sort of ignore where commodity prices are these days. What do you expect to hear from farmers at this show, here in Texas?
Well, I think what I've heard from a lot of farmers so far is cautious optimism. I mean, we all know where commodity prices are right now. We know what the market has sort of been right now. We've got global issues. We don't have a farm bill just yet. We've got some questions around renewable fuels. All of these things are real, and they're weighing on the psyche of farmers. But at a show like this, where you see technology, you see farmers getting together, where they're talking about policy decisions and policy priorities, the optimism continues to be high, despite some of the challenges that the industry is facing right now.
Hey, let's talk about supply chains. It's something we've been talking about a number of years.
Yeah.
Going back to the pandemic, are manufacturers doing better now? Are we seeing more tractors on farms faster?
We're really starting to see some of those supply chain challenges we were dealing with during the pandemic really kind of working themselves out finally. I mean, it takes 100% of the parts to ship a combine or ship a tractor, and we were dealt that blow. What we're also finding is that I think the manufacturers look at their sourcing of supply and recognizing that we had a brilliantly efficient just-in-time delivery system, and we're realizing that maybe we need to find some additional resiliency built into that supply chain, so we don't have those disruptions in the past. And so that we're really looking forward to seeing that. When you start to see farmer lots right now, or dealer lots right now, you're seeing a little bit more equipment starting to show up, and we're seeing some of those lead times that we were experiencing the last couple of years really begin to reduce to satisfy that demand in a timely manner.
Final question for you, Kurt, and that is about, I guess, alternative power solutions. I was in Germany this year at Agritechnica, and we were looking at a lot of electric tractors, and there didn't seem to be the same buzz about, that segment. Where are manufacturers now on alternative power, and specifically electric tractors?
Well, if you ask any one of the manufacturers, whether it's an ag, construction, forestry, mining, utility within agriculture, they're all trying to solve that same zero emissions challenge that we've been given. We all want to make the world a better place. Having said that, some of the technology works very well in off-road capacities, and some of it just is not necessarily set up. So electrical tractors is a perfect example. In certain situations, that might be a perfect application for that battery technology. In row crops, maybe not so much. So that's where we're beginning to see a lot of energy around, either hybrid technology or a lot of buzz around hydrogen, a lot of buzz around methane, different types of technology that are all trying to find ways for farmers to meet their climate goals, have society meet its climate goals, and still get the work that needs to be done that we've been doing with diesel for years and years.
Well, Kurt, hey, great stuff. Appreciate you making some time for Real Agriculture Commodity Classic.
You bet. Thank you for having me on.
That was Kurt Blades with the Association of Equipment Manufacturers talking to Bern Tobin back at Commodity Classic a few weeks ago in Houston. Have you heard about the Dirt podcast? Featuring down and dirty agronomic science and actionable crop management insights, The Dirt is the place to listen to industry experts break down the latest crop nutrition research and news. It is the podcast that helps farmers make better business decisions through actionable insights. Get ready for season 3 of The Dirt coming this spring, wherever you get your podcasts. We'll be back here on RealAg Radio with more of the top ag news stories of the day right after this. Get all the information you need to keep your pulse crop healthy and profitable with the Pulse School on RealAgriculture.com. The Pulse School is a free YouTube video series covering agronomy, research, and more across a host of different pulse crops. It's also available as an audio podcast wherever you download or stream your favorite podcast. Check us out on YouTube or visit RealAgriculture.com. The Pulse School, brought to you by BSF Canada.
What's next for your fields? At Pioneer, delivering industry-leading genetics drives everything we do. From the scientists in the lab to our local teams with boots on the ground. We are determined to get there first. Developing top-performing products, proven in more growing conditions than ever before. Pioneer. What's next happens here. Visit pioneer.com/Canada to learn more.
Now time for the top ag news stories of the day here on RealAg Radio. Excite your crops with inputs from Excite Bio. I'm excited. Access nitrogen and phosphorus with Excite Bio's lineup of inoculants and ag biologicals. Since 2010, they've been helping farmers harness the power of the soil. Learn more at excitebio.ca. And that's XITEBIO.ca. Okay. Top ag news stories of the day. Where to start? Up first, a lot of talk about interest rates and which direction we are headed. This kind of ties into some of the land value discussion that we had earlier. And one of the theories out there is that the Bank of Canada is really waiting for the Federal Reserve, most likely, not directly, but just probably not moving before the Federal Reserve does. Well, a story in the Wall Street Journal that it's a commentary article that putting the champagne back on ice may be the wiser course in relation to when you think rates are going to start to decline by the Federal Reserve. The price acceleration coincides with evidence that monetary conditions aren't as tight as Fed Chairman Jerome Powell has said. Equities have been rising almost without a break since late October. Speculative bets like Bitcoin are back in vogue. Gold prices spiked until a recent correction, and junk bond spreads over treasuries are signaling the risk is back on, baby, says the story. There's some evidence that the strong economic growth of 2023 has slowed, but there are no signs of recession. Yet as early as last week, Mr. Powell made clear that he expects to cut interest rates more than once in 2024. The question is whether that guidance looks wise amid these hardly stringent financial conditions. So that's the the Wall Street Journal's opinion. Now, speaking of Globe and Mail, there is a story in there entitled, "Politicians Want More Competition in Canada, but Supply Management is Still a Sacred Cow." Wah, wah, wah. Okay, what the article says is there aren't many issues that garner support across all party lines in Ottawa these days, but when it comes to the supply management system for egg, poultry, and dairy products, the mechanism that sets prices for producers, all of Canada's federal parties seem to see eye to eye. And this is quite true, actually. The article continues, political support for the controversial agricultural framework has endured, despite the country's ongoing affordability crisis and critics who persistently warn that it's Canadian consumers who pay the price. As a result, Ryan Cardwell, an agricultural economics professor at the University of Manitoba, doesn't put too much stock in what elected officials have to say on the subject. He says, on one hand, they talk about food affordability, and on the other hand, they have a government-sanctioned cartel in staple foods. He finishes off by saying, so it's talk, I don't give it much credence. So that's Stories in the Globe. And, this is a very divisive issue amongst the audience. Some people obviously very, very involved in supply management. Some are not. And we know this, as the article says, all political parties very much showcasing support, and the voting on 282 is a good indication of that. Approximately 150 workers of the John Deere Des Moines works in Ankeny, Iowa, will experience layoffs soon. Factory leaders notified workers about the layoffs on Friday, according to KTVO. In a statement, John Deere noted that each John Deere factory balances the size of its production workforce with the needs of the individual factory to optimize the workforce at each facility. And this, of course, ties as well into what we heard earlier when it comes to where new machinery sales are. Not a surprise. Probably more of this kind of stuff to come and be announced. Wholesale beef prices continue to charge higher. Wholesale beef prices weren't able to sustain all of their gains from Tuesday morning, but still ended the day at $171 higher for choice and ended up 72 cents for select. Choice boxes pushed above $310 and select is nearing $300. While movement has slowed, the strengthening wholesale prices are boosting packer margins. France has cut their wheat export forecast. France's ag ministry cut the country's wheat export outlook for 23-24. It now forecasts wheat exports outside of the EU at 10.15 million metric tons. That's down 100,000 metric tons from last month. Exports within the bloc are forecast at 6.19 million metric tons, down 130,000 metric tons from last month. Concerns mount over declining U.S. agricultural exports and trade strategy. So I've included this because I think this is something for Canada to be paying attention to as we creep closer to that July 1st, 2026 deadline on a potential renegotiation of the current USMCA CUSMA agreement. In a letter addressed to U.S. Trade Representative Catherine Tai and USDA Secretary Tom Vilsack, the writers expressed deep concern over the significant decline in critical markets for U.S. agricultural exports. They highlight the historical efforts made to increase market access through negotiations, removal of trade barriers, and holding trading partners accountable. Key piece of that. However, recent data indicates a troubling trend with the U.S. agricultural exports declining by over $17 billion in the last fiscal year alone, with further forecasts projecting an additional decline of over $8 billion in the current fiscal year. This decline is expected to result in a record agricultural trade deficit of $30.5 billion. The writers attribute this decline to what they perceive as an unambitious U.S. trade strategy that fails to expand market access or reduce trade barriers effectively. And this is something that we have been hearing a lot from farm groups, disappointment with the current administration's lack of focus on trade. Now, in the prior administration, we heard about trade every day. Now, some would say there's not a lot of difference between USTR Robert Lighthizer and USTR Catherine Tai. But how they are viewed is I think you can say is quite different. The article finishes by saying they criticize the Biden administration for not pursuing traditional free trade agreements while other countries, including China, Canada, the European Union, and the United Kingdom, continue to sign trade pacts that disadvantage American exporters. I had some numbers shared with me. We talk about the trade deficit. Canadians buy per capita $650 Canadian dollars worth of U.S. ag products on an annual basis. The U.S. buys 70. And that makes sense. Like, being adjacent to each other, we do a lot of business together. And Canadians consuming a lot of U.S. ag products. Okay, if you have any feedback on today's show, I'd love to hear from you. Send me an email, shaney@realagriculture.com. Or, of course, you can call that Real Ag feedback line, 855-776-6147. Thanks, everybody, for getting real and getting connected with Real Ag Radio. And we'll, of course, chat again tomorrow. Cheers, everybody.
Thank you for downloading this Real Ag Radio podcast brought to you by Focus Herbicide from FMC. Lentil and wheat growers get a clean start this spring with Focus Herbicide. Along with early burn-off and extended weed control, Focus Herbicide provides excellent resistance management. See your local retailer today.